Hello everyone, this is Jordan. This is your weekly recap for gold and silver and the miners. This video is being recorded on the late afternoon of Friday, April 12th, 2024. Hope you all had a great week. And after today, it's pretty obvious that gold and silver and the miners as well, we hit a short-term top. Pretty nasty intraday reversal, but that happens sometimes, and especially after a really strong run, just like precious metals have had. So let's get right into it. And starting off here, we have gold, silver, then we have the gold-silver ratio. This is gold divided by silver. So these are the daily charts, but pay attention to the daily candles here. And so this candle, you can see the nasty intraday reversal opened up here, opened up here, went all the way up like that, but ended up closing below the open. Same thing happened in silver, although because we gapped high, it looks like we gapped higher a little bit. So we actually, in silver, we closed above where we were yesterday, where we closed yesterday. But nevertheless, I mean, these are nasty candles. And, 1, 2, 3, 4, 5. We go back to last week, and I was talking about the gaps here. And, I mean, this is a bullish gap. This could also be a bullish gap. But I was talking about we were seeing too many gaps. We were seeing tails here where, there were signs that gold was maybe starting to slow down or weaken a bit in terms of this specific move, but it kept moving higher. This was not that great of a daily candle here. This here, because you can see, even though gold was rising, these candles were closing and gold was failing to hold the majority of the gains during the day. So that was a bearish candle. That was a bearish candle. That, of course, was a bearish candle. Then you had a good candle Thursday, very bearish candle on Friday. So just looking at the last week of daily candles, really only, well, actually, this is because gold did not close at the high here. So going through these last 5 daily candles, these are bearish candles, even though gold was moving higher. Same thing with silver, although the silver candles were not quite as bearish. But anyway, so we get the big reversal. I should have put the 50-day moving average on here. If you go to TheDailyGold.com, take a look at my article that I published, I believe, yesterday, or it might have been on Wednesday night, looking at when you have gold bull markets and gold makes a strong breakout move to new all-time highs, when gold is running, it usually corrects only the 50-day moving average. So gold is so far above the 50-day right now, that could be something it could come back to in the next 2 or 3 weeks. So look for that as an initial support. Just based on the candles, I would guess that this gap here will probably fill, and maybe this could be the bottom of the correction, possibly either here or here. As for silver, the question is, does silver bottom here at 26.25, or is it going to come and really quickly refill this gap? I'm not sure, or maybe the bottom could be right here, just below 27. So this area, that's you want to look at for silver. And we'll see this better in the next chart, looking at the weekly chart. But this daily chart here, this red line, I didn't even touch this from last week. I moved the other lines. I didn't even touch this from last week. And we can see, this is about 28.50 or so. And look, that's where the open was, and also the close was around there. So 28.50, and you can see this daily action. We can see that 28.50, this was going to be an area of resistance. So naturally, gold surges above 26. Where does it stop? It's going to stop at this resistance. And so it's perfectly normal if silver would come back like that before it goes higher. Same thing with gold. Gold-silver ratio, it hasn't broken below this trend line yet, but we'll monitor that for the next move higher in precious metals after this correction, unless this thing really jumps a lot. If you get kind of a weak move and silver holds up pretty well during this little correction, then when there's the next up leg, this will probably break the trend line to the downside. So getting into the weekly candle charts here, not a lot more than I can add after the last slide. We can see this is a bearish candle because even though gold gained over 1%, nearly $30 on the week, it closed at 23.74. Look where the high was, 24.45. So gold failed to hold these gains. Same thing with silver, although I'd say the candle in silver is a little bit better, but you can also see, look, this is that 28.50 area. And so the weekly chart shows that this is a really hard level for silver to make a weekly close above. But this close in silver, 28.33, this is actually, this weekly close, I have to go back, this is higher than all these closes. So this is, I don't know what it is. Is it an 8, 9, 10-year high weekly close? That's something to look at and monitor. Okay, now let's wrap this up by talking about the stocks. So looking at the stocks, there are GDX here, GDXJ, SILJ, daily bar charts. All of these are, this is the 200-day moving average. This is the 200-day. This chart, you can include two moving averages. So I have the blue is the 50-day, red is the 200-day. Look at how extended the market is above the 50-day. So the miners are really, really overbought. And that's a really good thing when you're coming out what could be a major bottom. But in the very short term, you're going to get some kind of a pullback. And so all these miners, we did the same thing where you had, this was strong move up and then bullish consolidation. These are actually bull flags. And remember, you may have mentioned in last week's video, or maybe I didn't, but I at least remember writing about it to subscribers, that the upside targets, the measured upside targets from all these bull flags were right around the red line resistance. And you can see going back to the 2023 highs, this would be resistance. This is resistance. This is resistance for SILJ. And I didn't touch these red lines since the last time I showed this chart. So the miners, they were able to trade, at least today, trade up to resistance, but then they got knocked back down. So they closed in a very, very short-term sense, well below resistance. I mean, this resistance is above probably around 35, 33.76. So GDXJ just about at 42. I believe the resistance is 43 or so. SILJ, target and resistance, both at 12, close at 11.19. So that's, what is that, 7 or 8% below. So where we are for miners, basically very, very strong and bullish move, very strong breadth. It reached its extreme overbought point in a very short-term sense. And it also reached resistance, these red lines. That's where we are. Probably going to see some weakness, probably going to see some selling next week. But I don't expect that we're going to get this big, massive correction that's going to last like 2 or 3 months. You have to be careful if you're worrying about that. Weakness in quality miners and quality juniors is going to be bought. These things could correct 15, 17% in like a day or two. It just happens right away. It happens intraday. So the high quality things that you may have missed in the last month or two, now is the time to buy those when we have weakness coming this week, maybe the next week. That's all for the video. Leave me a comment. Let me know what you think. How long is this correction going to last? How deep may we go in gold and silver? And I hope you all have a great weekend. Talk to you again next week.